Let's talk about trap traders and the power of the daily close. Now, the closing price is one of the most important levels to have on your chart, in my opinion. When used appropriately, this level can help you spot where other traders may be trapped in the wrong direction. This is a concept that I think if you master, you'll be able to implement into your trade plan regardless of the type of strategy you trade. And if you're struggling with bias or what direction to trade in, I believe that this will greatly help you if you master it. If you've not heard the concept of what a trap trader is, I assume most people are familiar with it. Trap traders or trap volume is referring to price levels and areas on the chart where buyers bought too high or sellers sold too low. These traders are stuck in a losing position. So this is the essence of support and resistance. Failed support becomes resistance because buyers are trapped at a level that they want to exit from. So we have our basic schematic here of one type of an example. We have a resistance level. The market breaks above it, accumulates above that level. Buyers buy here. Volume is building above this level. Traders are expecting it to continue higher. Instead, the market dumps, and anyone who bought here is trapped, wishing to get out of their trade. So, Paul Tudor Jones has said, always think of your entry point as last night's close. What does he mean by that, and how can we utilize it in our trading? I like to focus on daily closes after a large expansion day, particularly. So what does that mean? What does that look like? If we have a large expansion day, this case a down day, a bearish day, maybe it's a first red day after a pump up. If you've studied Stacy Burke, you know what I'm talking about. Traders are basically trapped up here because there's probably a level to the left. This is high of the week, perhaps. And so the market is unlikely to come all the way back up and let those traders out right away. It's going to put more pain into them because that's what the market does. Now, that's one such scenario. Now, we could also see the opposite where we have a down day. Perhaps we're coming back into support. We're in a higher time frame uptrend and the market is coming down, but people are picking tops. They see this down day. And what I forgot to mention in that last schematic is, if you've studied Al Brooks, traders buy and sell the close based on the daily close. So the daily close is very important. If you look at Investopedia, it's the last price at which a security traded during the regular trading day. It's a standard benchmark used by investors to track the performance of an asset over time. So when you watch CNBC, they talk about the market is up 4% today or whatever they're saying it in reference to the closing price. So everyone is focused and aware of the closing price. It's used to formulate line charts and calculate moving averages and other technical indicators. So it's a level that everyone has access to. They want to get a piece of that momentum. They believe the market is continuing lower, and so they sell the close or near the closing price and hope to see something like this where the market continues lower. But what I'm going to focus on in this video predominantly is the opposite, is when the market, instead of continuing lower, it accumulates around this closing price level. And then once you see it start impulsing back up, traders are trapped at this level. Based on the daily time frame, traders made the decision, because they think we're bearish, that this is going to go lower. They enter short and now they are underwater on their position. This is what we want to take advantage of. So let's look at some examples right off the bat from this past week. Right away, you can see we have this big run up, bullish move. The market looks bullish. It's just basic market psychology. Market goes up, people are bullish. You have this closing price. What do we get? A consolidation. Then at a key time, the market sells off sharply. If you trade supply and demand or imbalances, smart money, you can see we have an hourly imbalance right here. The market then trades back up into it and pushes down lower. So the market is basically trapping longs, trapping buyers too high. You can see that we have a nice little shelf here. Resistance, turn support, breakdown, sell off. What's it doing selling off? Anyone who's long here is trailing their stop up, and the market is going to go after the money there. Then Friday, we have the exact opposite. The market sells off sharply into the low of the day, closes here. Psychologically speaking, we're at kind of yearly highs, more or less, and a scary down day. You can see it looks very bearish, this close at the highs here. And so what you get is a consolidation at the beginning of Monday, the beginning of the week. And I have no idea this is going to happen, but when you see this consolidation after a down day and you see this impulse, we've got an imbalance, a new demand zone. You could look and find candlestick confirmations and all sorts of things. You can use different time frames. You can see we have this engulfing pattern here on the 4 hour. So depending on the time frame you trade, for me, I'll just tell you how I would execute something like this. What I'm doing is if I'm bullish based on the fact that we have a first green day on this Monday off of a support level, because you can see on the daily chart, not only did we have this bearish imbalance that we retested here, traded lower, and then impulsively traded through, we're now coming back up around and retesting it on the other side. So basically a resistance turned into support. We see a first green day. I have no idea that it's going to stop here and not continue lower, but when you see you have this first green day, I'm in bullish mode and I'm looking to buy the low of bullish up close candles, the low or the open. In this case, we have this nice open. If you look at the line charts, you can see these are equal clean lows. And then on Tuesday, we raid them. Of course, I'm not looking to enter at this time of day and hold overnight here. I like to get in and out in the same day if I can help it. I'm looking at hourly, 4 hour, and I see that we have this bearish imbalance right here. If we're bearish, the market should respect this and trade lower. But we're trading back into this closing price and this consolidation, this accumulation that has likely trapped shorts from this down move. Those shorts want to exit out of their losing position. An exit from a short trade is a buy. And so buys are coming in at this level. Those who are short exiting and new buyers are coming in who see this sort of demand, bullishness, impulsiveness coming in off of this level. New buyers combined with the buyers who are exiting their short trade fuel this move up. Now, for me, I execute by once this gets broken, we get this push through, a new bullish imbalance is created. The market pulls back, retests this. This is a down close candle, demand zone, order block, rally. If you use moving averages, I'm guaranteed you're going to see these reclaim the moving averages. The moving averages start pointing up. Maybe you do have time to look at the 5-minute chart. You would see if you watch my opening range video, you get a raid prior to 9:30 of a low here. I believe there's some divergence with the Dow. Liquidity grab before 9:30. The market rallies, pulls back at the open into this imbalance, into these down close candles. Market shows you what it wants to do. You get a big rejection, push up, new gap created. We haven't even hit the high yet. Now, let's say you trade the DR. I just want to do that because I know a lot of DR traders have been following me. You can see, what do we have? A scenario one, basically, where we engulf this down close candle, high time frame PD array at the DR high. Market pulls back to that area. That's a buy. So you can see how that sets up based on, again, this concept you can incorporate as an extra confluence or as a framework for what markets you want to even focus on a particular day. You're not always going to get this type of move because what often happens is you will see that there are opposing liquidity areas of trapped volume on the opposite side. Let's look at platinum for a second. I caught some of these moves here, not this whole thing, obviously, but if you look here, starting from these lows, we had a rejection off the lows. It's always easy starting at the extremes here. We get a nice rejection. We get our first green day. You could refine it and say we have this clean support, flush of that support, immediate aggressive reclaim up. Anyone below this level is trapped. The market comes back down, attempts to get there. It doesn't, but why? Why is it stopping short? Well, obviously it doesn't want to let people out who sold too low. But funny enough, when we have this big, large down move, this was the last kind of large bearish down day. Look at how we have, I like to take the last 4 hour or 3 hour candle into the close, map it out, closing price there. What happens? We map out that last candle, market pushes up. It's a consolidation, breakout, retest long to these highs. So that's a trade right there. That's on a Monday. What's it hitting? What is it reacting from? Well, we have this up move here. Market closes right there. Last 4 hour candle. Like here, market retraces lower. Like I said, retests off of this area, which is also a closing price right here and a down close candle. Market rallies up aggressively, closes near the high of the day. We can extend that out over time. Buyers who bought the close of this day are defending the level that they bought at to send price higher. So the market comes up here. Anyone who bought up here, market is consolidating. It's short term, puts some heat on the buyers that buy up here. That's why you see a little reaction right here. Some of these buyers are basically regretting their decision to buy here, and they sell, and the market reacts. What do we have on this day? We have a down close day. After a run up into some resistance areas, some sellers are coming in to sell the close. They sell the close. Here's our little final 3-4 hour candle. What ends up happening? Early on Monday, the market pushes higher, breakout, retest, expansion higher. We have our close after a large expansion. We mark out our last candle. Market close has been outside of it. Wick up. Buyers exiting their long up here. Market comes down. Retest this consolidation from this down day. Ends up closing here on this Tuesday. We have another down day, some scary candles, sellers coming into the market on the close. Those sellers are squeezed out of their shorts. Breakout, retest. So this is just a 4-hour chart. So we have our rally up expansion into the close. Okay, market consolidates, breakout, retest. Buyers who bought too high are selling. Market sells off. Where does it sell off to? This level again, where we can see these sellers were trapped. Market broke out, came back, only got a little bit of it. Market comes back, reloads, more sellers exit, which means buy orders coming into the market. Buyers come in off of this new demand. Market rallies higher. Now we have 1, 2, 3, 4 pushes. We have a new high, big long wick. Market closes at about that same closing price. Large sell-off, closing near the low of the day. What do we get? Last 4-hour candle. You can see the reaction that's going to happen down here. Market sells off. Closes again. Low of the day. Now it really looks like sellers are coming into the market. Look at this one. I haven't even talked about reclaims, but that's another different topic. But market reacts off here. Sellers here selling the close are squeezed when the market, mark out that last 4-hour candle, breaks out, retests. Sellers are, oh, I sold too low. They exit. Buys come in. Where does it lead to? This closing price of sellers. Now our sellers are reloading their shorts just like we saw the buyers do here, defending this price. Breakout, retest. You can just keep going on and on. It might be a little confusing if it's new to you. It's not a way of predicting every move, but it's a way of heading into a day, being able to identify where traders are trapped, where the trap volume is. Then what do you see after that? I like to look at imbalances and those types of structures. So I have one last example I want to share to illustrate how I incorporate closing price and trap traders into my trading on a regular basis. And so what I do these days, because time is so limited for me, I can't look at the 5-minute chart due to things that are going on. Maybe it'll change, but what I have to do, I've had to sort of adapt, and I will lay out a plan the night before based on the daily chart, instruments I want to focus on, and what direction I want to trade those instruments in. So in this case, I saw on this Wednesday, we had a very nice first green day, bullish close on this Wednesday. The market broke out of an inside day on the day before. Here, I'll get a little bit closer. We had an inside day on Tuesday. Market failed breakout, closing back within the range. So I have a good sense that we're probably going to go to the other side of this inside day candle, or maybe up here, or maybe even to the high of this overall structure. Furthermore, I can see that we're coming off of this kind of rally-based rally. If you've traded supply and demand zone, resistance turned to support. And so it makes sense logically. We're getting a signal to continue higher. Now, how do I incorporate the trap trader closing price idea? Well, very simple. I can see that we've had this high, the market's put in a high, and then had 3 consecutive days of bearish closes. I do know that anyone who's chasing this bearish move and is selling down near the close here on this particular Friday is trapped when the market pushes up impulsively on that next Monday. When the market revisits the area, we can see buy orders coming in, whether it's sellers closing or new buyers coming in or both. We get a nice reaction, like I said, breaking out the low of that inside day, closing back within the range near the high. So now I have a first green day. First green day as a low of day buy setup on that following day. Just about framing the trade. Now, you might say, well, wait a minute, you have this up close day, sort of an expansion day. We close near the high. Aren't buyers trapped here? And couldn't this sell off? And of course that could happen. And we do get a reaction. Let's see, the 3-hour candle is what I was using. Because I like this 3-hour candle. Before I get into that, let me just formulate this. We have this 3-hour candle here. So it's a low of day buy setup. I can see that at first I'm thinking maybe it's going to retrace lower, but at the beginning of Asia, we break out and close. Nice candle close. Breakout, retest, continuation is basically the setup. Now, back to this. Isn't this a problem area? And you could say yes, because we do have this solid bullish close. We extend it out and we do get a little reaction there, but I do believe that the odds stack up more in favor of longs for the reasons I've already laid out. Also, look at what we have here. This big run up closes here. So anyone who bought the close here, obviously, these are the buyers that are trapped, okay? The market comes up, this is where those buyers are exiting. So this whole thing is just a reaction to this area, in my view. And so yes, these buyers are sort of trapped here on a short-term basis from this one day. Maybe they do exit here, but now the sellers are the ones who are trapped down here. And so the market does give a pause, but ultimately, you could look at this on the lower time frame, and the best opportunity to enter is obviously after we've had the reaction and then the aggressive buyback here and close. So that would be the kind of, if you're looking at the chart at that time, that's the ideal entry for me. I like to build in a lot of flexibility in my trading. So I would just buy the retest of this consolidation. I know that we have a imbalance below that price may want to dip into, but because we've already had the close above on the higher time frame on the 3-hour, I'm expecting this area to generally hold. I know it can wick through, which is why I don't just put it like right here. I don't get super tight. Give it some room to breathe. I know I have a lot of room to target areas where if I'm bullish, if I'm right, this is going to go in my favor pretty quickly. And so, clearly this was capable of much more. I did not hold this whole move, but it's a very tradable move based on the logic of a first green day setup, utilizing the story of trap traders from the daily close from this large downward expansion. So again, this is just scratching the surface. This concept, I'm not just trading every close and every consolidation off of a close on every chart. I'm being very specific, very deliberate. I'm going to go into more in future videos how I kind of overlay my setup, my trade model, the things I look for with things like the daily close and with trap traders to help make decisions on a daily basis. So hopefully this was helpful. Hopefully you liked the video. If you have any questions, leave them below. And I will talk more about this with more examples in the future. I do appreciate the support, and I hope to do more in the coming days and weeks. So thanks again.